Magandang gabi po sa ating lahat. Welcome to Home Court Advantage Real Estate versus Real Estate Investment Trusts or REITs. In this webinar, we will try to answer the following questions. Number one, what are real estate investment trusts or REITs? Number two, how are they different from investing in actual real estate? And number three, should you go for real estate or should you go for REITs? Which one could provide investors with a home court advantage? Tonight, let's try and find out. This webinar is brought to you by Securities Brokerage Corporation, the stock brokerage and online investment arm of the Metrobank Group. FirstMetroSec is International Finance's awardee for Best Online Broker and Best Online Trading Platform for 4 years in a row. FirstMetroSec is also Finance Asia's best broker in the Philippines for 2017, 2018, and 2020. My name is Marc Tarog, your presenter this evening. I serve as a Business Development Officer, Market Education, and Partner Distribution Officer for FirstMetroSec. I'm also an entrepreneur and currently a graduate student taking my master's in finance. My goal tonight is to share with you some of the things we've learned about the topics of real estate and real estate investment trusts in a way that is simple, understandable, and most importantly, useful to you. So, let's get started. Let's start with real estate. Many of us here probably have some experience with real estate. When we think of real estate, what comes to mind first is usually land, house and lot, condominiums, or apartments. Either napag-isipan na ho natin to buy real estate at one point, maybe some of us are starting out, paying amortizations for a property. Some of us may have already bought one or several properties. Why do we buy property? Why do we buy real estate? We buy either to use for ourselves or to invest. Purchasers of real estate have the option to use the property to live in it and to use the amenities if there are any. Purchasers of real estate can also use the property for future cash flow in the form of capital gains, if we decide to sell the property in the future, of course. We can also use it to generate revenue through rental income, if rented or leased out to another party. As a potential investment, real estate can provide capital gains or rent revenue. In buying or investing in real estate, some of the major considerations for our decision making process are number one, quality and attractiveness of the property. So, when my wife and I were looking at condominiums recently, we were advised by a broker to use our senses in assessing and evaluating the property. So, sabi niya, we must go there, see it for ourselves. It must be pleasing to the eyes. Use our sense of smell and our hearing to smell and to hear if there is um, anything nice about it, anything that is not nice about it. No, we're also used to use our sense of touch, feel out the tiles, the walls, no, of course the model unit, and usually a developer or the developer is a good indicator of the quality and attractiveness of the property. Next, we look at the location of the real estate. No, in buying property, we normally think about proximity to business centers or where we work, proximity to schools, hospitals, commercial centers, access to major roads and highways, and then even in some cases, proximity to family. Another major consideration for real estate is, of course, the cost. No, when we think of the cost of real estate, we think in terms of cost or price per square meter. I recently asked my former colleague, who is now a real estate broker, for a listing around Metro Manila just to check the cost per square meter during the pandemic. And this is what the list contained. What I would like to highlight is how expensive the cost per square meter is, no matter where in Metro Manila. Whether you are at the low range, let's say around 63,000 per square meter or 54,000 or 40,000 per square meter, no? Or whether you are at the high range. High range could be anywhere from 211,000, 356,000, per square meter. Whether you are at the low or high range, an investor will spend millions on the cost of property alone. Millions. Aside from this, there's also other buyer's costs, such as the 1.5% documentary stamp tax, the 0.5 to 0.75% transfer tax, the title registration fee, and various incidental fees like the notarial fees. No? And if ever we as investors decide to sell, there's the 6% capital gains tax that we have to pay, the 5 to 10% broker's commission that might be imposed on us. The developer might have a commission as well, and of course, incidental fees when selling. The bottom line is investing in real estate could be very expensive, and an investor can end up paying 15 to 20% more on top of the total cost of the property. Going back, aside from the considerable costs, there's also the terms and conditions. These refer to the amortizations, the yearly lump sums, and interest rates on any loan that an investor might have to take out to afford the property. So are these terms, these amortizations, these lump sums, are they workable? Are they affordable given the investor's capital and cash flow? Kaya bang bayaran? Aside from terms and conditions, we have economic conditions. These are factors that will allow the property to be productive. And by productive, I mean be able to generate rental income or to appreciate in terms of cost per square meter or price per square meter. What factors are these? No? What are these economic conditions? What are these factors? These could refer to employment and wages. This could refer to inflation or GDP growth. It could also refer to fiscal and monetary policy. Siguro another example would be the presence of a crisis. So halimbawa ngayon po, during the pandemic, it might be a little bit more difficult to find interested tenants in a real estate property you might have. For one thing, they may have challenges with their income. Baka because of the restrictions, hindi makaikot, hindi makagalaw. So therefore, living in a certain area might be difficult, no, for the person. So these are the economic conditions that might affect our investment in real estate. And finally, the last major consideration we will mention is the presence of a market, no, in case the investor wants to sell and liquidate the investment in the future. So will there be a buyer at the investor's preferred price, or would the investor have to adjust to the buyer's price? Any investor may have to wait until a buyer is found, and if ever, may go through a lengthy negotiation process. This may also include negotiations with the broker and what the broker will charge. No? In short, investing in real estate can be lucrative, yes. And they say property almost always appreciates in value. But the trade-off is it is also no walk in the park, no. It can be difficult, it can be challenging. And given the mobility restrictions we all currently face, the threat of catching COVID-19, it could be even more challenging nowadays. So far, when we've talked about real estate, we've had land, we've had house and lot, condominiums, and apartments in mind. But what if? What if we can include in our definition of real estate office spaces, commercial centers, and other commercial types of real estate like hotels and resorts? No? Aside from house and lot, condominiums, apartments, what if we can also think about investing in office spaces, commercial centers, hotels, and resorts? As investors or potential investors in real estate, the idea of owning office spaces, retail spaces, and other commercial real estate is probably quite strange and foreign. And that's because unless you are a wealthy landlord with a lot of commercial real estate, this option was not widely available to us investors until recently. The option of being able to invest in these types of real estate is now widely available to the investing public through real estate investment trusts or REITs. Again, the option of being able to invest in these types of real estate is now widely available to the investing public through REITs. So now we ask, what is a REIT or what are REITs? REITs are stock corporations that were set up and exist to own real estate assets that generate revenue and income subject to a REIT plan. So they are stock corporations that were set up and exist to own revenue and income generating real estate. Both the REIT and the REIT plan, which they must follow, must be registered with the Securities and Exchange Commission, and the REIT itself, the REIT company itself, must be publicly listed on the Philippine Stock Exchange. Income generating real estate assets that REITs own generally refer to office buildings, commercial properties like shopping centers, hotels, and resorts, but this may also include apartment buildings, resorts, warehouse, and others, as long as they generate revenue and income for the REIT. When these revenue generating real estate assets provide income to the REIT company, through the rent paid, through the income generated, the REIT company is required by law to distribute 90% at least of its distributable income to its shareholders annually. Why do I say distributable income? Syempre, in a company, when you earn, you can set aside income for reinvestment into the company, or you can set aside for distribution to shareholders. So, by law, 90% of the REIT's distributable income, or the part of the income that will not be reinvested, should be distributed to investors. And this is based on Republic Act number 9856. Now that we've defined what REITs are, let's try to evaluate REITs using the criteria we used earlier. So what did we mention? We mentioned number one and number two, quality and attractiveness. We also mentioned location of the real estate. So now, talking about REITs, these are now determined by a dedicated fund manager. So REITs must engage an independent fund manager to act as an investment manager to assess, evaluate, acquire, and ensure quality of all tasks related to the managing of its income revenue generating real estate portfolio. So yung fund manager basically yung bahala to ensure the quality, attractiveness, and the location of their real estate portfolio. Itong strategy ni fund manager are outlined in a REIT plan, as I mentioned earlier, a REIT plan. And again, this REIT plan must be registered with the SEC as well. REITs must also engage an independent property manager to act as administrator of the real estate assets once it is under the REIT company's portfolio. So aside from quality and attractiveness, aside from location, let's talk about costs now. When investing in REITs, investors now have to consider not the cost per square meter or the price per square meter. We now consider the share price of the REIT itself. And if we are going to invest, we consider the share price of the REIT multiplied by the number of shares that we will be investing in. Since it is traded on the Philippine Stock Exchange, these are subject to the standard fees and charges like every other publicly listed company. As for the terms and conditions of investing in REIT companies, again, REIT companies must be registered with the SEC. No? So the REIT company is subject to the terms and conditions of the SEC. Since they are listed on the Philippine Stock Exchange, they are also subject to the rules of the Philippine Stock Exchange. Therefore, the REITs must abide by the REIT law and the implementing rules and regulations set by the SEC and PSE. As for us investors, we are free to choose how many shares to invest in. But of course, as participants in the PSE, we have to abide by the rules of PSE when it comes to investing and trading shares of the REIT. Next, economic conditions. So when it comes to the REIT, economic conditions may refer to the demand for office spaces. These can include factors such as GDP, employment, income, inflation, as mentioned previously. But now, all these are determined by the fund manager and the principles of the REIT company. The goal of the REIT company, everyone from the managers all the way to the board, is to actually maximize shareholder value. That's why any company is set up and that's why companies exist, to maximize shareholder value. So because of this, everyone in the company, from managers all the way up to the board, have incentive to choose only the best revenue and income generating real estate assets. And finally, since the shares of REITs are traded again on the Philippine Stock Exchange, they are perceived to be more liquid. You can sell shares as long as the stock market is open. So let's summarize the difference between real estate and REITs, investing directly in real estate and investing in REITs. For quality and attractiveness, kapag real estate po ang iniisip natin, we as investors will have to make the assessment. And if we purchase the real estate, we will have to be the one to maintain it. If we invest in REITs, we don't have to do that. The fund manager will take care of assessing the real estate, care of the REIT plan. And once the revenue or income generating real estate asset is under the REIT portfolio, yung property manager na yung bahala sa administration and maintenance of the property. Okay, so we don't have to do that. That is handled by the parties that REIT companies engage with. As for location, again, if we are going to invest in real estate directly, it will be our assessment as investors. And it's usually residential type. So we have to also choose kung sino yung uupa sa atin, who will pay us rent, if the person has a history or mapagkatiwalaan naman, no? But when it comes to investing in REITs, we don't have to worry about collecting revenue and income. That is the job of the fund manager also. And again, they are mostly, majority leased out to commercial companies. In terms of costs, when buying real estate, if we're going to do it directly, we are subject to the quoted price per square meter. The price per square meter may be quoted by the developer or the previous owner of the property, no, plus considerable fees and taxes. No? So baka magmahal yung investment natin. But when it comes to investing in REITs, we are subject to the share price multiplied by the number of shares that we will invest in, plus the standard fees and taxes of trading on the Philippine Stock Exchange. So for those of you who have experienced trading shares, I'd like to also remind you that of the 8K rule, the guidance. Kung halimbawa sa selling of real estate, they are subject to 6% capital gains tax. In trading shares, the total charges is 1.19% for the buying and selling of stock. No? Magkasama na po yun, buying and selling, 1.19% if you're trading 8K or more. And then if the REIT or when the REIT announces dividends and will be distributing dividends, dividends are subject to 10% tax for individuals and 0% for resident corporations. As for terms and conditions, when buying real estate, if we go directly and invest in real estate, we are subject to the terms and conditions of the developer or the previous owner. Again, it will depend on amortization, yearly lump sum, interest rate, if we will borrow. It will also depend on our cash flow, our income, among others. Pero kapag sa REITs tayo pumunta, if we invest in REITs, an investor simply has to bid for shares, pay the market price for each share multiplied by the number of shares and the corresponding fees and taxes in stock trading. In terms of economic conditions, when buying real estate or investment directly, we have to assess if the property will appreciate over time. We have to make that assessment. And we will look at economic factors such as, again, employment, wages, inflation, GDP, so on and so forth. If we go and invest in REITs, we don't have to make that assessment. Again, it will be the fund manager's assessment, and they have to study whether the economic conditions are affecting businesses rather than retail users of the property. And finally, in terms of liquidity or presence of a market, if we go directly to the property market and invest in real estate directly, we have to assess whether somebody can or will buy the property from us in the future, depending, of course, on the previously aforementioned considerations. Pero kapag sa REIT, again, it's more liquid because it is publicly traded on the Philippine Stock Exchange. So, if through real estate directly we earn via capital gains and through rent income, how can investors earn through investing or by investing in REITs? Just to recap, investors can earn through price appreciation. We buy the shares of the REIT at a certain price, and if we sell it at a higher price, then we see price appreciation. So that's one way, but since the REITs are required to distribute dividends annually, if there is distributable income, then it can provide a good source. It can be a good source of dividends. So two ways to earn in REITs: price appreciation and dividends. Okay. So at this point, you might be thinking, para saan or para kanino ba yung REITs, no? REITs are investments suitable for aggressive investors, no? Aggressive investors with a high risk tolerance, looking to diversify into attractive dividend yielding stocks. Again, I'll remind everybody that these are shares of stock of a corporation. So there are a lot of risks of investing in stocks, and REITs are not exempted from those. It's just that because the underlying real estate assets are perceived to be more stable, then perhaps the share price might be more stable, and perhaps this may provide more regular dividends than regular or common shares of stock. So I hope you were able to answer the questions, what are real estate investment trusts or REITs? No? I hope you were able to answer how are they different from investing directly in real estate. And now for the last questions, no? Should should you go for real estate, or should we go for REITs? Which one could provide investors with a home court advantage? So what do we think? What do we think about the answer to this question? Well, we think that we should go for both real estate and REITs. We should go for both if we have the time, if we have the resources, and if we have the experience. Each option, real estate or REITs, both have pros and cons, but investing a portion of your investable funds in each option will allow us to diversify, and it will allow us to help reach our financial goals. No? So invest in both if you have time, resources, and experience. When should you not go for any of these options? If you haven't set up your rainy day fund or emergency fund, kung hindi pa po natin nagagawa yun, then we should not go for either. First, build up your rainy day or emergency fund. Again, this is 6 to 9 months worth of your monthly expenses. Build that up before building your investment fund and then deploying it to assets such as real estate or REITs. So don't go for any kung wala pa po tayong emergency or rainy day fund. Again, suggestion lang po yun. If you'd like to start investing, by all means, you can do so. But if you have built up your rainy day or emergency fund, but have limited investable funds, no, we're still building up our investable funds, then REITs may be a good starting option for us. Since they are traded on the Philippine Stock Exchange, the minimum board lot system will allow us to start investing with only a few thousand pesos. So between the two, the one with home court advantage is the asset that we can invest in when we are literally at home. The asset that we can literally invest in while we are at home, all the way from doing research, buying, selling, settling all fees and taxes, no, are REITs. So REITs, in our humble opinion, have here, in this case, the home court advantage in general. So in our humble opinion, once again, REITs give us the home court advantage for a potential slam dunk investment potential. So I hope you were able to answer the question of should we go for real estate or should we go for REITs? I hope you were able to answer the question of which one could provide investors with a home court advantage. So, how can investors maximize this home court advantage and buy shares of REITs at home? Simple. That is by logging into your FirstMetroSec online trading account, the most reliable trading platform in the country, and bid to buy shares of REITs. As your broker, representing you and your trade on the Philippine Stock Exchange, we work to make sure that you have enough information, you have enough access to REITs for a seamless and reliable trading and investment experience. Now I'd like to share with you the REITs currently available in the stock market so far. So currently there are three. We have the AREIT, or the REIT company of the Ayala Group. We have DDMPR, or the REIT company of the Double Dragon Group. And third, we have the PhilReid, or the REIT company of the PhilInvest Group. So allow me to briefly discuss the salient points of each by touching on their short history so far, their attractiveness, their underlying real estate assets, and prospective dividends. So let's start with the AREIT. This is the pioneering REIT in the Philippine stock market. Its IPO, or initial public offering price, was 27 pesos per share. But as of market close on August 16, AREIT reached a price of or closed at a price of 36.65 pesos per share. So that represents a price appreciation of 36% since IPO. So that 36% is a little over a year, no? At the current price of 36.65 pesos per share, the trailing 12-month dividend yield is 4.3% gross, and it is on pace to achieve a dividend yield of 4.8% over the next 12 months if it continues to give quarterly dividends in the amount of 44 centavos per share. A REIT boasts of 52 billion pesos worth of property value this 2021. When they debuted on the Philippine Stock Exchange, they had 171,000 square meters of gross leasing area. 1 year later, by assimilating more real estate assets into the portfolio, they have grown their gross leasable area to 549,000 square meters. No? They boast a 99% occupancy rate. And in the first half of 2021, the REIT company, registered 1.3 billion in net income, and they have so far distributed 882 million in dividends. No? So true to form, they have been making investors happy. What are the notable real estate assets under this REIT portfolio? In the beginning, there was Solaris One, Ayala North Exchange, and McKinney Exchange in Makati. And then they quickly acquired Teleperformance Cebu, Ayala Mall at the 30th in Pasig, and a piece of land in Laguna Techno Park. And the most recent developments include a property for share swap with its sponsor, Ayala Land Inc., for 15.5 billion pesos worth of commercial assets for 483 million shares. Next, we have the DDMPR. This debuted in the Philippine Stock Exchange last March 2021, and it debuted at a price of 2.25 pesos per share. Since then, the share price has fallen to 1.77 pesos per share as of market close on August 16, 2021. And according to the DDMPR REIT plan, this REIT is expected to provide investors a dividend yield of 5.07% this year and 5.45% next year in 2022. Pero at the current price of 1.77 as of August 16 market close, if they are able to follow through, then if you buy shares of DDMPR at 1.77, then the yield can actually be 6.44% this year and 6.67% next year. No? So, depende na rin yun sa kung anong presyo natin bibilihin yung shares of stock. DDMPR boasts of 220,000 square meters of gross leasable area. No? They reported a 97% occupancy. And in the first half of this year, they reported 1.8 billion in net income. And out of that 1.8 billion, they have distributed so far 854 million pesos in dividends. What are the notable real estate assets under this REIT? Mostly located in Pasay are the Double Dragon Plaza, Double Dragon Center East, Double Dragon Center West. And post the IPO, they used the funds to develop the Double Dragon Tower and the Ascot DD Meridian Park, also in Pasay. And the third REIT to hit the market this year, so far, is the PhilReid. PhilReid debuted on the PSE last August 12, very, very recently, at the price of 7 pesos per share. Since then, the share price has risen to 7.4 pesos as of market close on August 16. And according to the REIT plan, PhilReid is expected to provide investors with a dividend yield of 6.3% this year and 6.6% next year. PhilReid boasts of 17 Grade A office buildings totaling 300,000 square meters of gross leasable area. They reported a 90% occupancy rate, and 88.4% of those occupying belong to international or global business process outsourcing companies. So far, this first half of 2021, PhilReid recorded net income in the amount of 0.05 billion. So the notable properties here are two general areas. No, the first one is in Northgate Cyberzone Alabang. They have 16 buildings there, and the other one is Cebu Tower in Cebu. There are actually two more REITs that will soon be offered to the public and debut on the PSE. They are Robinson's Land Corp REIT or RCR and the Mega World REIT or MREIT. Like most companies listed in the PSE, they will be undergoing their initial public offering, raising capital from investors. So investors will invest. In exchange, they will receive shares of stock of this REIT. The REIT will use the funds for the purchase, development, and maintenance of income generating real estate assets. And again, these real estate assets are expected to provide income for the parent REIT company. And then the REIT company will distribute at least 90% of the distributable income as dividends to its shareholders. And of course, there's always the potential for price appreciation down the road. So if you want to maximize the home court advantage, we have some good news for you. Interested investors can open a trading account. You can fund your trading account and withdraw from your trading account all online. In fact, we've made it so easy that you can open your own investment account in just 3 easy steps. Step one, visit our website. Please go to www.firstmetrosec.com.ph and click open an account. Step two, complete the online registration form. You will be asked to verify your email address. And then step three, please upload the required documents online. And that's it. When you're registering for an account, please remember to input the seminar code REIT 101. This will help us know that you attended this webinar and that you are interested in investing in REITs. When you open your very own FirstMetroSec online trading account, you can then access the same through our mobile app, FirstMetroSec Go. You can download this on Google Play and on the App Store. When you're ready to fund your online trading account and invest, we have a multitude of funding options for you. And we have an online guide in case you need some help to transfer funds from your nominated settlement bank to your online trading account. When you're ready to invest, when you have funded your online trading account, you have so many options available. You can invest in all the listed stocks in the Philippine Stock Exchange. You can invest in the country's only exchange traded fund, the First Metro Philippine Equity Exchange Traded Fund. You can select over 40 of the country's top performing peso and dollar mutual funds. When the Bureau of the Treasury offers retail treasury bonds, you will be able to invest. And of course, you can invest in real estate investment trusts or REITs. So many options at the tip of your fingers when you open and invest with First MetroSec. For guidance, updates, news on latest REIT developments, stay updated with our Viber community. So please take a screenshot of this slide or scan the QR code flashed on screen to join our market updates group, our market updates community. Here we will also share stock market recos, dividend announcements, alerts on new research reports, polls and contests, and invites for upcoming webinars. I would also like to invite everyone to like our First MetroSec Facebook page and join our bustling Facebook group where we provide also market updates, release seminar and webinar schedules, and sometimes hold contests. So visit us at www.facebook.com/groups/FirstMetroSec. For those who like to listen to podcasts, check out our top-ranked business podcast on Spotify, which is normally hosted by our research analyst, Mr. Royce Aguilar. If you found this video, this webinar useful, please do visit our YouTube page, First Metro Securities, which is filled with many more informational videos such as this one. So subscribe to First MetroSec's official YouTube page and have access to a multitude of educational and informative videos, all the way from beginners to advanced investors. If anyone has a question, if anyone would like to know more, please do visit our help desk. So find us at help.firstmetrosec.com.ph and click on the topic which you'd like to clarify on. There are articles for REITs, for online stock trading, for funding, withdrawing, and others. So in closing, I'd like to share with you recent quotes from the prominent figures in the REIT industry, starting with Ma'am Josephine Gotianon Yap, chairperson of PhilReid. No? In a disclosure in a press release dated August 13, 2021, she remarked that investing in REITs, the debuting of the PhilReid on the Philippine Stock Exchange, it is a vote of confidence not only in PhilInvest, the PhilReid, but also in this new asset class, PhilReITs, REITs in general. This is a vote of confidence not only in our company and this new asset class, but also in the country and in what has proven to be a most resilient industry in our economy, the PPO sector. So she offers that investing in REITs, at least for PhilReid, it's like investing in the BPO sector. We are excited to grow this financial platform for the benefit of our REIT holders. Next, I'd like to share with you some words from Mr. Injap Sian, the DDMPR chairman, when DDMPR debuted on the Philippine Stock Exchange last March 24. In that press release, he remarked, the benefits for investors of a REIT investment is truly compelling. Your DDMP REIT basket is what I call the Pamana stock, being a stock that owns prime freehold titled land, no? And by this, I think he meant the land in Pasay City and the grade A buildings that sit on it. While Pamana is for the succeeding generations, investors of DDMPR still get to enjoy, current investors of DDMPR still get to enjoy the quarterly cash dividend benefits of the DDMPR investment as we temporarily hold it um, in or on behalf of your next generation. So gives us an insight to the thinking of Mr. Chairman when it comes to DDMPR. And finally, um, one from Ms. Carol T. Mills, AREIT President and CEO, in a press release dated August 13, she said, we are grateful to our regulators for paving the way for REITs in the Philippines. It has been a meaningful journey for AREIT as the Ayala Group, the AREIT Group, has undertaken bold steps to introduce a new equity investment, a new equity instrument into the market and educate local investors. So we are glad to have demonstrated through AREIT the benefits of investing in REITs and its contribution to fueling real estate development. So recall that AREIT saw significant price appreciation, and in addition to that, has been giving out dividends quarterly. So with these three statements, I hope we all are inspired and get an insight as to the reasoning, the logic, the motivations behind all these issuances in the Philippine stock market. So I hope you were able to learn something new from this webinar. I hope I was able to add value to your evenings. Once again, this has been Marco from FirstMetroSec, and on behalf of FirstMetroSec, thank you for tuning into this webinar, Home Court Advantage, Real Estate versus Real Estate Investment Trusts, or REITs. And remember, with FirstMetroSec, it's your future first. Thank you very much. Hello, everyone. Good evening, and thank you for listening in to our webinar. There are a few questions here which we'd like to answer. If you'd like to still join us, please feel free to do so. If you'd like to leave, then thank you again for joining us. So let me read out some of the questions and do my best to answer them. So thank you for those who opted to stay. Okay, question number one from Trisha. Thank you, Trisha, for sending in your question. Again, if you guys have any questions, please shoot them in and we will do our best to answer. So Trisha's question is, given that Trisha's question is, can I create a trading account with FirstMetroSec using my non-Metro Bank, my BDO savings account? Can I create a trading account with FirstMetroSec using my BDO savings account? The answer is yes. You can open an online trading account as long as you have a Philippine bank account. It does not have to be Metrobank. It is preferred that you use Metrobank so that the funding and the withdrawal will be faster. But in case you prefer to use BDO or any other local Philippine bank, you may. So I would just like to share with you that for more information on funding and withdrawing, how to fund and how to withdraw, please visit our help desk, help.firstmetrosec.com.ph. So thank you, Trisha, for your question. Okay, next. Read one from Daphne. Thank you, Daphne, for sending in your question. Daphne's question is, what is the average dividend yield of REIT companies in the Philippines? From our discussion earlier, from the presentation, we shared some of the dividend yields. No, Ayala is looking at around 4.4 to 4.8% per annum. DDMPR is looking at around 5%, and the PhilReid is looking at around the same range of about 5 to 5.5%. So, how do we compute for dividend yield? We compute for dividend yield by taking the annual dividends distributed. Usually, it's in pesos or centavos per share. Okay, we take all the dividends distributed for the year. Okay, and then we divide that by the share price to get the dividend yield. All right. How do we get the dividends per share? Okay. How do we get the dividends per share? We take the total amount. Let's say in the example of AREIT, which distributed, I think, 882 million. You take that 882 million and divide it by the number of total outstanding shares to get the dividends per share. So that's how we arrive at the dividend yield. No? How does this differ from listed property company like Ayala Land Inc., Robinson's Land Corp, or SM Prime Holdings? Sige, sama na rin natin yung Mega World. How do REIT companies differ from listed property companies? No? Siguro, I'd like to qualify the answer by saying that the nature of the business between REITs and these property companies, talking about Ayala, Robinsons, SM Prime Holdings, and Mega World, their business model is different. So we presented earlier that REITs exist to own revenue-generating properties. So you can count on stability, you can count on reliability, you can count on cash flow from the underlying assets of the REIT company. Okay, so in a way, it's also like a holdings company. You know, it's very much like a holdings company. Pero yung kabila, yung Ayala Land, Robinsons, SM Prime Holdings, the business model is quite different in that the assets of those companies are not revenue generating assets like what REITs have. Normally, these property companies, their business model is to sell condominiums and properties, no, make a profit out of selling to the interested investors directly in real estate. No, so I would say that Ali, Robinsons, SM Prime Holdings, and Mega World are cyclical companies. They grow when the economy grows. No? They do well when the economy does well. REIT companies, because of the nature of their business and the underlying revenue generating real estates, are usually under contract for a number of years, usually long-term contracts yung mga yan. I think will underperform during good economic years as compared to Ali, Robinsons, SM Prime Holdings, and Mega World. No? So those four are cyclical companies. They do well when the economy does well. They might underperform versus REITs in times like this, where there is a lot of uncertainty. But both of them have the ability, the potential to give investors returns. No, it's just how they do it. So I hope I was able to answer adequately how REITs differ from listed property companies. They differ in terms of their nature. How does this REIT or do these REITs differ from other dividend play sectors such as telco and power? Relating that back to my answer, no, it depends on the business model. So, ang telco and power, yung business model nila is subscription based. So you have a consumer who wants to take on a prepaid or a postpaid plan, they're going to pay to use the services. And they have add-ons, so on and so forth. Kapag power naman, you have a house, you have an office, you have a building, and you have this requirement, energy and power. So you subscribe to them and get billed monthly. So iba yung nature of the business ng mga yon. So telco and power, similar to REITs, do give dividends, no? However, they are not required by law to distribute dividends unlike REITs. So REITs, nasa batas ho that kapag may distributable income, kailangan ipamigay sa shareholders. Ang telco and power companies, if they are common shares, not required. No? They are doing it only because they want to make shareholders happy. So iba yung discretion ng management when it comes to both. So I hope I was able to answer your questions, Daphne. Thank you for sending them in. Next question, one from Hanel. REIT is on the stock market, yes. What are the monthly or yearly charges we should know about? Okay, so thank you for that question. No, if you are invested in shares of stock, whether it's shares of a REIT or common shares of a listed company, there are no monthly or yearly charges you should know about. The only charges you should be aware of are the charges that are imposed on you when you buy or sell shares, or in other words, when you trade. But holding the shares, holding them for long term, or let's say for short term, for just a month or like that, basta hawakan lang, there are no charges for this. I'd siguro like to point out that kapag namigay ho ng dividends yung REIT, I think I mentioned this in the presentation, the dividends that investors will receive are subject to a 10% tax. No? So let's say you are going to get, halimbawa po, 5% in dividends. Siguro safe to say that yung 5%, yung net nun is 4.5% talaga yung makukuha natin. That's just the nature of the tax here in the Philippines. We are taxed, but companies, resident companies here in the Philippines are not taxed on dividends. So again, just to answer your question, there are no monthly or yearly charges we should know about sa atin as investors. No? Wala. But REITs, the companies, they follow their own regulations when it comes to how they tax their income, how they tax their revenue, so on and so forth. No? So for that question, siguro we need to invite to one of these webinars a representative from a REIT, just if anyone's interested to know how REITs operate more in detail. So thank you, Hanel, for that question. Next, I'd like to answer one from Stephen. All right, sige, thank you. Thank you, Stephen, for sending in your question. Given that PhilReid is new in the market, how can investors access their financial statements in order to analyze their fundamentals? So thank you, Stephen, for that question. Prior to this webinar, I actually spent time scanning and going over the REIT plans. No, for all intents and purposes, those REIT plans are like a prospectus. So my projections doon, my financial statements doon, and it will also indicate there the potential risks and rewards of investing in REIT. So these REIT plans, especially for PhilReid, are available online. So if you Google PhilReid prospectus, I hope the first entry there is the link to the PhilReid website where you can download the REIT plan. No? So makikita doon yung performance ng REIT company and the projections as well. But since, again, the REITs are listed on the Philippine Stock Exchange and are subject to SEC regulations, they are required to disclose their quarterly performance. So because they just listed last week, I did see the first and second quarter performance. In fact, my first half performance na doon. No? So the financial statements can be viewed on PSE Edge. So just Google PSE Edge, go to the website, input in the search bar PhilReid, FILRT, and then look for the disclosure with the first half 2021 financial statements. So all of this information is publicly available, so feel free to look for it through Google. Thank you, Stephen. Next question, one from Alexander. Thank you, Alexander, for sending in a question. You're welcome for the quick overview. I hope I was able to do it clearly and simply. Medyo I had to go over 3,000 pages for this webinar for 40 minutes, no? So sana I did it justice. Would fundamental and technical analysis also apply to REITs, similar to any other stocks? And thus, FirstMetroSec offer courses for beginners. First question, would fundamental analysis work? Yes. Fundamental analysis could work, no? And in fact, I think any business can be subjected to fundamental analysis, no? So for those of you who are listening, when we do fundamental analysis, we try to determine the intrinsic value of the company. That is represented by an intrinsic share price. So there are a number of different ways to do this. We can go through different valuation methods. Let's not touch on that now, but assuming that you do your fundamental analysis, you should or can come up with a number that represents the value of the stock. And then if it is above the current share price, then that will indicate that the REIT is undervalued. But if you do your fundamental analysis and you come up with a number that is below the share price, and that perhaps suggests that the REIT is overvalued. All right. So pwede naman gamitan ng fundamental analysis. I think the appropriate fundamental analysis for REITs may be discounted cash flow. Okay, so you might want to look at the free cash flow to equity and free cash flow to firm, and then discount that, arrive at the your intrinsic number. Technical analysis, does it apply to REITs? I've been observing Ayala REIT since August last year. I did see some indications or signs that this particular AREIT does follow some technical analysis, but I think that the share price was driven more by the activity of the company. AREIT has been so active in acquiring income generating real estate and including it in their portfolio. So dati tatlo lang yung properties nila. Ngayon, there are siguro more than 10 buildings, 15 buildings. I mentioned the gross leasable area when they started was 171,000. Now it's 549. So ganun sila ka-active in less than a year. And I think that was the catalyst for the price appreciating from 27 pesos to 36 pesos per share. So kahit na dati, no, when I remember nung nag-IPO sila, the prospectus I think indicated that the dividend yield was somewhere around 4.5%, 4.6%, something like that. They actually outperformed. No? So kahit yung presyo niya is around 36, 37 pesos ngayon, assuming again they can maintain their 44 centavos dividends per share every quarter, then you're looking at 4.8 if I remember correctly. So magaling yung REIT, high quality, no? High quality yung REIT na yun. And I think going back to the question, technical analysis could apply, but since medyo early pa in the game for REITs, we have yet to see. No? So sa ngayon, people usually invest in REITs for the dividends that they distribute, and also the potential for the firm to grow, no? And the firm grows when they acquire more assets. So yun. Ngayon, more fundamental than technical. So thank you for the question. Does FirstMetroSec offer courses for beginners? Yes, we do. And I'd like to give a shout out to our consultant, Mr. Aaron Sai. He is our resident market educator for fundamental and technical analysis. So stay tuned for announcements on when Mr. Aaron Sai will be doing his guided investor fearless trader learning series, and he'll teach you everything from analyzing the market, doing an economic analysis, doing fundamental analysis and technical analysis. So please do check out our social media channels for this, but you can also just follow our FirstMetroSec Facebook page. So thank you, Alexander, for the question. A few more questions before we call it a night. One from Epi or Ipay. Epi, siguro Epi. I hope I got your name wrong. Pasensya na ho if I got it wrong. I hope I got it right. So, pasensya if I got it wrong. Epi asks, do I think REITs will be profitable in the upcoming years if most BPO companies are going work from home? REITs seem to depend on BPO leasing. So thank you for this question. For this question, I will attempt to answer with my pseudo analyst hat. No, I'm not an analyst, but in my humble opinion, because these these BPOs, these offices that rent real estate, no commercial real estate, which again the REIT companies will profit from, because they are under contract. Okay, because they are under contract for a long-term lease, the cash flow will be somewhat stable. Okay, cash flow will be somewhat stable. Um, the most stable so far that we've seen is AREIT. PhilReid is looking really good. DDMPR, as disclosed in their first half 2021 briefing, that they actually earned more than AREIT, the 1.8 billion, and that was, I think, a surprise. No, I think despite a lot of people still working from home nowadays, naka-lock in yung mga negosyo yun eh. So they are under contract. And if we're going to follow what some of the property experts say, yung mga Colliers and David Lichu, all those analysts, then um, the BPO sector is actually seeing a resurgence. No? The demand for office spaces by BPOs has rebounded in the second quarter. And I think that's a good sign, not just for the REIT industry, but also in general the economy, because as more BPOs look to rent, and as more BPOs look to get set up, then more Filipinos will get jobs, they'll get income, and that can only be well for the economy all around. So I think sa ngayon we're stable, but again, we're all basing our views no on the idea that by siguro 2022 we'll achieve um, herd immunity already. We'll have some semblance of normal life again, and I think employers will want their employees back, no, in office spaces. So whether it's going to be this year or next year, I think the REITs will be stable at the very least, primarily due to the contracts that they have with their tenants. So thank you, Epi, for that question. I hope I was able to answer it adequately. Thank you. Next one from Manolita. Thank you, Manolita, for sending in a question. I could choose only one. Which will I choose, MREIT or RCR? So thank you for that question, Manolita. Unfortunately, I don't know much yet about Mega World REIT or RCR. I have not been part of any briefing that talks about MREIT or RCR. I have heard some things, but I'm not allowed to share in a recorded webinar or at all. But if the previous offerings were any indication, and I'm talking about PhilReid and DDMPR, then these two might look to price their shares at a level where they can provide competitive dividend yields. No? So I hope to hear more. I hope to learn more about this, and I hope that FirstMetroSec will be able to share this information through retail reports with everyone. No? So as to the quality of Mega World and RCR, I don't quite know yet which properties will be included in their portfolio, but again, just the fact that many people are trying to raise funds and launch their REITs this year is a testament to the strength of the industry. No? So what we can expect is at the very least that these REITs will give dividends, and bonus na lang kung may price appreciation sila. How do these REITs achieve price appreciation? They do this by expanding their balance sheet, I think. No? And of course, announcing and disclosing and trying to improve, of course, market sentiment for their names. No? So I'm sorry I'm not able to answer that question, but I hope I was able to give you some flavor as to the approach for when we do our own assessment. So thank you for the question. Next one from Mr. Wilbert. Thank you for sending in your question. The question is, am I right to choose DDMPR since the shares include the land which the other REITs do not? So, Mr. Wilbert, tama po kayo that the one thing that DDMPR has going for it is that the land in which their property sit on is owned by the company. So, yung Ayala, they don't own the land, they only own the building. But again, the building is on a long-term lease. I think, if I remember correctly, somewhere around 30 to 50 years. Same goes for, I think, PhilReid. Somebody please correct me if I'm wrong, but I understand that they are also on a long-term lease for where they are. yung DDMPR, yung lupa nila sa Pasay, sila po may-ari. So, that's what they have going for them. Kaya nga sinabi ni Mr. Sia na pamana stock yun. No? So, is it right? Are you right to choose DDMPR? Siguro I need more information to qualify what being right means. As I showed earlier in the slides, no, yung DDMPR so far has been the REIT that has underperformed in terms of price stability, no. Yung AREIT appreciated, PhilReid appreciated a little bit. DDMPR from 2.25 IPO bumagsak siya to 1.77, 1.81 I think as of today's close. And observation ko lang, yung pananaw ko, yung view ko is that I think the market sold off DDMPR shares because of some concerns as to their revenue generating real estate. No? So if you look at the breakdown of their portfolio, there were some siguro tenants there that had some uncertainty. And I think the market did not like that. And I think they reacted towards that. Pero here comes DDMPR and they came out and said, hello, we earned 1.8 billion this first half, 2021. I have not seen the breakdown of the 1.8 billion, but it's a good sign, no? So kahit may pandemic and kahit sobrang daming challenges of the lockdowns, uncertainty, so on and so forth, they were able to churn out a huge profit, no? So my suggestion is to diversify, no? I think naman that REITs are mainly invested for their dividends. So if each of them are giving 4, 5, 6% dividends, and each of them have varying qualities, then it can only be good if we diversify among those. No, if you prefer quality, then go for the ones with long-term leases and who have clients na talagang stable. No? So if that's what you prefer, go for that. If you prefer for maximum yield, then you can go for other names na baka hindi as kilala or as stable as the ones previously mentioned, pero if they hit it big, then they'll share the income big with their investors as well. So it's good to diversify. No? So I suggest to not just invest in one or two, but try to allocate your investable funds among the available REITs. No? Anything can happen. Anything can happen when it comes to the REIT market. As we've seen from Ayala nga na parang they didn't really disclose, no, or they didn't really say that they'd be this active when they came out. Sabi lang nila, with the money that we've raised, we'll buy Teleperformance Cebu. And then suddenly, here comes Ayala 30th, here comes all these properties under the property for share swap deal. So, you never know, no. So I think it's good to diversify. Right. So thank you for the question. I hope I was able to give some flavor and answer it adequately. Thank you. Next, let's go back to Daphne. Daphne, thank you for sending in a second question. If you're still here, thank you for joining us pa rin, no? Next question, should I opt to invest for the REIT sponsors, no? Or invest in the REIT directly? So yung specific question is, should I go for a REIT or should I go for ALI? No? So again, I'd just like to qualify this answer by saying that magkaiba sila ng nature. No? Both are shares of stock, yes. Both are listed in the stock exchange, yes. Pero yung business model, excuse me, of each is different. So I think that when the economy starts to open up, when restrictions ease, you'll see a lot of money be poured into the blue chip names like SM, Ali, of course, the Metrobank Group. No, you'll be seeing a lot of money be placed in blue chip stocks, index names. So, assuming that the recovery is tuloy-tuloy, looking into 2022 and 2023, if we enter another bull run over the next 5 years, then I think Ali will outperform AREIT eventually. So, that's just the nature. That's just the nature of cyclical stocks. But when it comes to AREIT, I think sa ngayon, they've proven to be very, very generous and very, very good in providing superior returns. No? So while there is uncertainty, we can still siguro put more weight or invest more of our capital in these types of dividend yielding assets. No, so not just REITs, pero some power and telcos, and of course yung mga magagandang holdings companies dyan na nagbibigay ng dividend like DMC. No? Pero again, when the uncertainty is clear, when the risks ease, then you might see a lot of these cyclical names like Ali outperform. So, should you invest in one or the other? I think you can consider investing in both. No? So, ayun, it's up to us to determine that. Pero thank you for the question. I hope I was able to give you some insight. Next question from Hanel again. Thank you. Can you share some insight for the Double Dragon investment portfolio on how it has negative growth? Okay, I don't really want to highlight the negative things about a company, no, but let's just say that a lot of its tenants faced some challenges over the past year, or since debuting on the Philippine Stock Exchange. I don't know yet the update on whether they are still there or not. Pero again, the numbers speak for itself. 1.8 billion in net income for the first half of 2021. So um, one thing that I'd like to mention that was highlighted during the IPO of DDMPR was that itong klaseng tenant nila na in question, yung special thing about that or a risk mitigating factor is that they had a security deposit or they were required to pay a security deposit equivalent to 12 months worth. No? So in the event that they had to stop the lease or let go of the contract, DDMPR would be assured of at least 12 months worth of rent, which would give them a lot of time to look and replace the businesses that would leave. No, so there are risk mitigating factors then, especially in the contracts of these things. No, pero I think DDMPR remains to be a good option. Of course, it underperformed, pero for those that did invest in DDMPR in during the IPO, you'll be happy to know that yesterday or was it Monday, the company announced that they will be paying dividends. No, I think 0.02777, something like that, marginally higher. I think it was 20% higher than the previous dividends per share. So, yung strategy ni DDMPR is to develop yung DD Ascot DD, Meridian Park, and the other one in Pasay, and include that in their portfolio. So I think that might be a catalyst for the share price to recover, and that will also be a catalyst for more dividends per share in the future. So siguro kapit lang muna tayo. But if you want to rebalance and invest in the forthcoming MREIT and RCR, you may do so as well. No? So I think that's as good an answer I can give. So thank you for that question, Anel. Next question from Charles. Thank you, Charles, for the question. Your question is, what is my sentiment? What is your sentiment if I diversify my portfolio in REITs? Well, Charles, siguro I'll have to qualify this by asking you, what is your objective, no, for investing? Is it long-term capital growth? Is it to receive cash flow and income through dividends or through coupon payments? How much of your portfolio do you want in each? No? So siguro the best person to answer this question is you. But what I say is if you are looking to invest in an option, an asset that will give cash flow, how often it's looking like quarterly. If you want an option that will potentially give you some price appreciation, then REITs are a good option. No? REITs present to be a good option. I think hindi pa siya masyado kilala. In fact, I think there's still a lot of work that has to be done in terms of investor education. But we're getting there. No? And uh, I'm not encouraging to put your entire portfolio in REITs because at any time naman pwedeng sumipa yung index or yung cyclical names. But what I'm saying lang is that they present a good option for diversifying your investment and your at least it will trigger a review of your investment objective. So thank you, Charles, for your question. I hope I was able to give you an idea how to think of an idea how to address the or look for the answer at least. So thank you. Next question. We have 8 minutes pa, but if you would like to throw in your questions and if ever we run out of time, I'll do my best to reply to your question. No, we have your email address, and we'll do our best to reply within the week. No. So next question is from Mark. His question is, how will rental rates affect the REIT's performance over the long term? Will it be significant, or will it be not so much, since it's all under contract? All right, thank you, Mark, for the question. No, again, I'm not an analyst. I'm not a property analyst, so I'm not privy to the trends in the real estate market. I'm not privy to how these contracts were set up. Siguro it's a question better answered by our analyst or somebody from the REIT. But I would imagine that for the underlying assets, no, they have a flexible arrangement. They may have a flexible arrangement with their landlord. Some of them may not have a flexible arrangement. I think that at this time, we're leaning towards the flexible arrangement given the challenges that we face. But encouragingly, kahit na may flexible arrangement for some, not all, kumikita pa rin yung REIT at namimigay pa rin ng dividends, no? So imagine na lang what it would be like if the economy were to recover, the landlord can quote a higher price, and the businesses leasing will be able to afford the higher rental payments. No, so it can only mean good things. So I think right now we're at the baseline. Um, of course, there's always the chance that this baseline might go down low, if especially if the pandemic persists all throughout next year. No, hopefully not. Pero sa ngayon, where might you look for stable dividends? You might look for telcos. You might look at power generation companies. No, but the difference between power generation companies and REITs is that if you don't use the office, wala kang babayaran na electricity. Ang REITs, kahit di mo ginagamit, may upa pa rin yan, no? And you can't just leave because you're under contract, no? Yung sa energy, you can turn off the lights. So there is that stickiness when it comes to REIT. There's that stability compared to telcos, no? So um, I'm not also sure. I don't know the developments on whether these rent rates are regulated. Pero let's watch out for any report from Colliers or David Lee Chu or any of these property experts. No? Sa ngayon lang, all I can say is that the projections for REITs are enticing and attractive, and I think that until there is some indication that it will be otherwise different, then it will continue to be a considerable option for us. So thank you, Mark, for the question. I hope I was able to give a decent answer for this. Thank you. Next, we have two last questions. No, so thank you for staying with us. We have 5 more minutes. I'll try to answer them in the time remaining. So you're welcome, Charles. Thank you for attending as well. Last two from Epi and Daphne. From Epi, minimum amount to open a FirstMetroSec account. The minimum amount that we will ask you to deposit is 5,000 pesos. That 5,000 pesos that we will ask you to deposit initially is yours to use. No, you can use it to invest. You can leave it in your account, and you can do with it with whatever you please. No, so the minimum amount opening initial balance required is 5,000 pesos. Thank you, Epi, for the question. And if you have any more questions, please feel free to email us and reach out to us through the social media channels. And I hope to get or to continue the conversation with you guys as we go along. So kami naman, parang gusto lang naman namin to guide and advise. No? We want to give you the best option, and we want to help you grow your capital. And by talking and conversing with everyone here, we also learn something from you. So we can only encourage more of these as we go along. So thank you, everybody. I'll end the webinar, and I'll pray for everybody to stay healthy and to stay guided. So once again, my name is Marco from FirstMetroSec. Thank you, and have a good evening to all.